Yeah, morning, Fox. It's a very simple strategy, very simple goal strategy that you can trade every day. This is a day trading strategy. I call it 100% because of the risk management and recovery system. I'm just gonna take a few minutes to explain to you. This is very simple, very simple. So every day between 6 a.m., not 6 a.m., 4 a.m. From 4 a.m. to 10 a.m. GMT time. Remember, 4 a.m. to 10 a.m. GMT time, you're going to look for an area where the market creates a low or a high of the market. So a higher high or a lower low for just that session, just the first one. It's better to take the first one, but if you've missed this first one, you can take the second one or third one as long as you're still in that time. But I'll prefer that you take the first one. All right. So, we look at things like that. So we're gonna start from this day, the day I'm recording this video, 16th of January. We're gonna go back and see. Okay, so we look at this. Okay, on this day, so I've just this box showing the Asian range, and then this is 4 a.m. And this is 10 a.m. So from 4 to 10 a.m. we want the low. How we're gonna identify the low? Don't worry about the whole price action. If you look at price action, yeah, that will also help. But whatever you see on price action to show a low or a high, you need to make sure that the RSI 4 and stochastic are oversold if it's for a buy, or they are overbought if it's for a sell. So here we have RSI and stochastic. So RSI is below, preferably it need to be below 80, but if it's below 30 you still fine, as long as the stochastic, the baseline, is also below. So we have this opportunity here. So at this level here we have a low level. So the market here showing us a low, but we need to wait for confirmation. So what do we find? Where do we find confirmation? The confirmation, we look for the first. So the 15-minute need to give us one. Either you look for one bullish candle before you buy, or another thing that you can do is to look for to go on the lower time frame, like the 1 minute. So on the 1 minute, I'm going to look for the EMA 9 to cross the 21. So we have somewhere here. So this is where I'm gonna place my buy trade. So if I'm looking for the EMA, it's gonna be around here. But if I'm looking for the first candle, it's gonna be around here, because this is the first buy candle. Okay, so we have the first bullish candle, which is around here. So I am going to buy above that first candle. So this will be my range. So this is my range. Okay. Okay, so this is my range here. I'm gonna buy here and go ahead. Okay, so in terms of the TP, all right, so when you buy here, okay, we have this indicator, the trend rebound. Once it's turned from orange to blue, they show you that this area above this area, we are now in a risky zone. We are in an area where the market can easily reverse. So you can take profit here, but I would suggest that you look from 1 to 1. So this is our range. 1 is here. So this is exactly where you place your TP. All right. So once we have a failing one, then I'm going to show you how the strategy gets to be 100% win rate, how we're going to recover that loss. Okay, but for now, let's look at this one, which is a win. Let's go back to the previous day, which is this day here. The market comes, it fall here. Okay, we haven't had buy because this high here was formed before our time let's see our time. There we go here. So the markets tell us here that we need to sell. That is around here. Tell us that we need to sell. Okay, so we go on lower time frame. Where is the lower time frame? Okay, so we're looking for confirmation on a lower time frame. Okay, so this is our confirmation on a lower time frame, which will be the cross of that. We're going to be here. So here we need to sell. Now, as you can see, as we sold here, the market went but did not reach our target here, but went back to our entry. Not to our entry, to the area where you were supposed to have a stop loss. Now, if you have a stop loss here, you've lost this. If you were risking 1%, you've lost 1% here. Now, what we're going to do is, as we place this trade here, we have our TP here. All right. And then we will put our stop loss. Instead of having our stop loss here, we're going to have a pending order. We're going to have a buy stop here. So if we have a buy stop on this level of a lot size, which is double this lot size, which means if the market reach here, we are break even. But now, there can be a scenario where it activate this and still come back here again. And then it goes back there. So what we will do is that we're going to place, let's say for example, here you had a 0.001, a 0.01. Here you're going to have a 0.02. It activated. Here you have 0.03. And here you have 0.04. So as the market goes here, activate this, and the fourth one, when it activates this, it goes up and it reach our target here. So the TP here, when you reach this level, remember now, we had one trade here, which was, so I'm just trying to write on this. Okay, no, it's cool. So we have a 1 here, right? This sell here, which was a 1. But the moment the market reach here, the moment the market reached there, what have we lost? We've lost 2. Because 1, 2. So we've lost 2 of our risk gap. So we are minus 2 here. Now, here we place the next lot size, which will be a 2. So we have plus 2 here. And then we have this. This one will reach there. And then the last one that was placed here has also reached its target. Okay, so we have 4 trade there. Now, how does it get to 100% win rate? Remember, the rest of the trade were just a way to recover. You need to make sure the next lot size you use represent double of the first 2. So here we have a 1, double of 1 is 2. So here we're going to have a 2. Now we have a 1 and a 2 exposure. What is the double of what is what you call that? And then we have a 1, 2, and then here we're just gonna have a 3, and here we have a 4. So now this 4 here, when we reach in the top, it's 4 times 1, which is 4. So in terms of the plus, what we're going to have, we're gonna have 4 here, and we have 2 here, which give us 6, right? So if we keep it like 4 and 6, we earn 4 and 3, we're not gonna recover that, because remember, in terms of our losses, we lost 2 here, and we lost 2 times 3 here, which is 6. So we have a loss of 6. Let's say you are losing $1, so we have a loss of $6 here, a loss of $2. That is 8, which means the top as well must give us 8. So the first one we're going to have 2. The second one need to give us 6. So now if we have a lot size of 1, 2, 3, 3 again, this, by the time we get to this level, we are break even. All right, so I'll repeat again. So we're gonna take 4 trade. So we gonna take 4 trade. The first one, we sell here 1. We place a pending order of a buy stop here with a lot size of double this one, and then we place a sell stop here after this one is activated. If the market shoot down here, the scenario where the market shoot down here, this trade here will give us a 3 times 1. This will give us a 1. So we're going to have 4. And this 2 here will give us a -4. So we still going to be at break even. So either the market goes up here, we are at break even, or it goes down here, we are at break even. And it means that on this day, we are on break even. That means we did not lose, we did not make profit. That helps us recover instead of just taking a stop loss here. Sometimes it may be a bit challenging to actually do this manually, but I have a free software that can help with this. Robots that can do all this. All right, so guys, that's it. I've taken an example of a win and a loss and how we recover that. Thank you for watching. Please remember to subscribe for more videos and more systems. All right, see you in the next video.